Are you a non-resident Indian and confused about your taxations, asset, and investments in India? So this podcast is for you. All right. So the today's agenda is कि for newly moving or settled NRIs, we are trying to see that how can they manage their finance, taxation, and compliances with the Indian law. So before we begin, I would like to ask, there are so many people, those who are going abroad, but there is still very less knowledge, or what we can say, area or people speaking about FEMA Act, or they are still confused with how should they go about their finance. Why do you think is there a gap?
First of all, I thank you for organizing this podcast on a very critical and important topic, specifically targeting the non-resident and the compliance they need to do under the Income Tax and the FEMA Act. Once a person becomes non-resident, he has certain obligations to fulfill under the Income Tax as well FEMA law. But due to there is a less awareness among the students and the people going abroad for job or any other purpose, they bound to make the mistakes. The main reason is they are not aware or not consulted. So my first advice will be those who are going foreign for any purpose, abroad for any purpose, whether it is a job or a resident or a study, they should consult their tax consultant and investment consultant what impact they will have on their tax filing as well as their investment portfolio. These are two important things a person should keep in mind.
All right. So to start with, let's address the elephant in the room. Ki who qualifies for a NRI under income tax and FEMA?
Yeah. So first of all, a person say, I need to explain the concept of the non-resident Indian, which is NRI. The reason the concept of non-resident Indian or NRI introduced, because there is a different taxation system for the non-resident, which is governed by the Income Tax Act, and they have to do certain compliances with their banking and investment, which is governed by the FEMA. NRI are defined in income tax as well as FEMA both differently. So one need to understand that whether he is a non-resident or NRI as per income tax as well as he is a non-resident for FEMA Act. For the purpose of income tax, non-resident is defined based on the residential status and the person stays out of India, and the distinction why he need to know, because the type of income taxable in India will change for the resident and non-resident. So the compliance burden will increase and there will be certain restrictions on the asset. So now as talking about who qualifies an NRI for the purpose of income tax, there are three categories of a person. A person can be resident. So for the purpose of tax residency, a person can be resident, a person can be resident but not ordinary resident, and person can be non-resident. So this criteria is depending upon the number of days he stays in India. We will not go into much detail, but I will give an overview. If a person stays in India for, in the previous year for less than 182 days, that means he stays outside India for more than 182 days. That is the first condition he has to fulfill. Secondly, he should be resident in 2 out of the 10 years and 730 days in the previous 7 years. If that all these three conditions are satisfied, then he will be considered as person resident of India. Okay. If he is not satisfying these conditions, obviously he will be called as a non-resident of India. Then there is one more category, person resident but not ordinary resident. We will not go into much detail in that because it is a bit complex. So taxation for the purpose of income tax, the residential status will depend on the number of stays in India and outside India. So firstly, person has to determine whether he is a resident or a non-resident. and he should take the help of the tax consultant or tax professional. For the purpose of FEMA, again it is depending, but there is no three categories, there are only two categories. For the purpose of FEMA, a person can be resident in India, non-resident in India. Resident in India when he in the previous year was in India for more than 1 to 2 days, then he will be considered as resident in India. Other cases, he will be considered as non-resident in India. But if he goes outside India for the purpose of employment or for the purpose of business or for any uncertain period, then from the day one he is considered as non-resident of India.
In order, if I have to make it short, so in a simple language, can I say a person who stays for more than 182 days outside India will be a NRI citizen?
Yeah, in a simple word, that is a one thing.
That's a basic thumb rule that we
Basic
can
thumb
say.
rule. Yeah.
All right. And for people, those who are watching this podcast for the first time, can you let me know what is FEMA?
Yeah, FEMA basically Foreign Exchange Management Act, and it is law governing the foreign currency transactions. Okay, and specifically if anyone wants to deal in the foreign currency or remit any fund outside India, buy asset in India, outside India, then we have to see whether the FEMA compliance is done or not. And mainly the RBI is a regulatory body through the authorized dealer bank, AD bank we call, they ensures the compliance of this act. So FEMA regulates what you can buy in India, what kind of accounts you can keep in India, what kind of investments you can in India, what is permitted and what is not permitted. So it is a regulatory law for the non-resident and for the making the cross-border transactions and investment, including remittance of any foreign currency. So if anyone wishes to remit the fund or buy asset outside India, he need to ensure whether it complies with the FEMA provisions.
After someone has decided, now we know that a person is NRI by qualifying the things that you have said. What is the first step? मतलब वो पहला क्या चीज है जो उन्हें करना चाहिए when they are moving abroad? Is it before they go there or after they go there?
Yeah. So basically, going abroad is itself not a criteria whether he will be non-resident, resident. He has to fulfill minimum number of days stays outside India to become a non-resident for the purpose of income tax and as well as for the purpose of banking and investments. Now I will take you the first part. For the purpose of income tax, whenever he files the income tax returns, there is a requirement whether he is a resident of India or a non-resident of India. So he need to discuss the correct residential status in the filing the return. The basic law is that for the non-resident, only Indian income is taxable in India, and for the resident, Indian income including global income is taxable in India. So if I am a resident in India and I am having an income from Indian business and as well as certain income from business in US, the both will be taxable in India, subject to there will be some tax benefit of the US taxes paid. But if I am a non-resident, then only my income in India will be taxable in India. So correct classification is required. For the purpose of FEMA, the classification is must, because once you become a non-resident, you need to intimate your banker, because whatever the bank account you are holding, first thing, they are made for the resident Indian, and non-resident has to open a separate bank account called non-resident external account, NRE account, or non-resident NRO account. So they have to intimate the bank and get their account status changed from normal saving account to the NRE NRO account. That is the first thing. Second step is whatever the investments they have in the shares, mutual funds, PPF, they need to intimate them also, because there are certain restrictions, and for the NRI they need to open a separate Demat account once they become a non-resident. So it is very important for them to intimate to the relevant investment companies and everyone about their change in status. Fortunately, every bank has one dedicated relationship manager to serve the NRI, and their queries are taken care. And most of the procedures, including the opening of bank account, is done online. As of now, India don't have any system where the government can detect that he has become a non-resident now. So it has to be intimated by a person to the various agencies about changing his residential status.
Okay. Nowadays, I also see a lot of banks doing the KYC process on an annual basis. And if the KYC is not done, they don't allow you to transact in those accounts.
Yeah.
So, is that a new way for the government in order to track if a person is NRI or a non?
See, KYC is nothing related to the NRI tracking. It is just an RBI compliance process, and they want that the account per operating person is genuine, existed in India, and if he has moved outside India, then the government may come to know through that way also. But the objective of doing the KYC is not to track the NRI; it is a routine process by the bank.
Okay. So you also have told that officially it's a voluntary decision that a person has to inform all the agencies that they have been transacting through in order to tell them that they have changed their status from a resident Indian to NRI.
Yes, it is onus of the person to intimate all the relevant agencies about changing his residential status and update to banks and the Demat companies and the investment companies about the same.
So, sir, now that we know that who qualifies as an NRI, what are the things that he or she needs to do, like before going and after going? Now, I would like to particularly ask about the investments that they do in India. Let's say a person who has already done their FDs or PPF in India, do they have to change that, or how do they go about it?
Yes, as already I said you, once you become the non-resident, and when we are talking about the investments and the banking part, we have to see whether we are non-resident as per FEMA. Okay, so once you are become the non-resident as per FEMA provisions, and if you are having existing fixed deposit in the bank, you need to update the bank about changing your residential status, and your FDR fixed deposit will be designated as non-resident fixed deposit account. The change will be that the bank, normally when you are resident, they deduct the 10% TDS, but when you are a non-resident, the TDS deduction will be at a higher rate. So bank need to be aware about you are a non-resident so that they can make the compliance of the higher TDS rate. That is first thing. As about the PPF, a non-resident cannot open a new PPF account. But if you are having an existing PPF account, when you were resident, you can continue till its maturity. Till its maturity, even though you are a non-resident. So for example, if you are having a PPF account and already 10 years completed, and now you become a non-resident, for the balance 5 periods, you can still operate your PPF account, but you cannot open a new PPF account once you become a non-resident.
Okay. Let's say a person is already having his or her mutual funds that are going on from a very long period of time, and now when they qualify for NRIs, what will be the changes?
Yeah. So as per the standard prescribed procedure, again once a person become a non-resident as per the FEMA, then he has to redo his KYC, intimate the respective mutual fund companies regarding the change of his residential status, so that they can update their record, and if they need to do any tax compliance specifically for the NRIs, they will be able to do that.
Can a person have his NRE account, NRO account, and a saving banks in India?
Yeah. Now there are two things: what is the technical part and what is the practical part. Now technically, the normal saving account are made only for the resident Indian, and the government gives certain interest on that. Once you become the non-resident, you cannot have the normal saving account as well as your NRE NRO account. That is the law. But when we talk practically, there is no mechanism to track whether a same person having a normal saving account in a bank and he may have a normal NRE NRO account in B bank. So practically that may happen, but when we're talking about the technical part, it is not permitted and allowed. So once you become a non-resident and you have opened an NRE NRO account, you should close your normal saving account. Here I want to add one thing. I have seen people who has already become a non-resident for 10 years, but still they are operating normal saving account, not open the NRE NRO account, because again there is no mechanism for the government and for the bank and for the regulatory authority to track when a person becomes a non-resident.
What happens with shares and Demat account when they go into NRI status?
Yeah. So when a person deals in the shares, invested in the shares or trading in the shares as a resident, he has certain freedoms and privileges. He can do F&O trading or a margin account trading or whatever the things he can do it. But when a person becomes non-resident, there are certain restrictions. A person cannot do the normal margin trading account. He can invest in the shares. Now, the Demat company should aware that you have become a non-resident. So a person need to intimate and get his new account opened under the category as a non-resident and close the earlier investment, transfer all his account from the resident Demat account to non-resident Demat account. So the Demat company will restrict his right of investing and dealing in the margin trading account. That is one thing. Secondly, when a company knows that you are a non-resident, again there will be a different TDS deduction on your dividend and other part. So it is very important for a Demat company to know your change in the residential status so that they can ensure you are doing a regulated trading and you are not violating any law. If you are a non-resident and still operating the resident Demat account and doing the margin trading, you are non-complying with the FEMA law, which will attract penal consequences.
Have you ever seen like people getting notices from FEMA in order for not complying with all these things, and how big is it?
In my practical experience of 2 decades, there is no very strong mechanism to look for the non-compliance done by the non-resident of the FEMA or of the income tax due to change in their residential status. But whenever the department comes to know through the third party agency, they initiate the inquiry and actions, and in very rare cases I have seen such instances, the detection rate of non-compliance is very low as of now, as there is no strong mechanism in India for the same. But again, I advise that one should voluntarily do the compliance and do not wait for the regulatory agency to tell them that they are doing the non-compliance.
I have also seen, being an investment advisor, like we have seen a lot of NRIs are interested in real estate market in India. So how does that work? I have 2 particular questions. The first one is, what happens to their earlier investments that they have made, and can a person buy lands being in NRI status?
Yeah. So this is a very common questions we get from the non-resident Indians NRI regarding their investment in real estate. Now, first part I will answer what will happen to their existing real estate investment. They can continue to hold their existing real estate investment and they can rent it out, they can sell it off, whatever they need it. So whatever the income earned from that real estate, either by renting or selling, will be taxable in India. Okay, that is first part of your question. They can take this money out of India after paying the income tax in India and following a due procedure which is prescribed in the law. So there is no restriction in that. Non-resident person also can invest their fund in India in the real estate asset except agriculture land. Okay, So non-resident are not permitted to acquire agriculture land or investment in the agriculture land. The right of buying the agriculture asset is restricted to the resident Indian only.
So people, those who sell their asset, like, are they applicable for TDS also?
Yeah. So whenever a person sells asset in India, so if NRI sells an asset in India, whatever the capital gain coming on that part, a person needs to pay income tax on that part. So first compliance he need to do that he has to file the income tax return and paid the tax on that sale transaction. And whenever a buyer, resident buyer, if buys any property of non-resident, he has to withhold and deduct income tax at a very high rate. Okay, that rate may range from 12.5% to 20% under section 195, and this is a very complex process, so I do not want to cover much in detail. But whenever a person disposes and sell his property or give on a rent, ensure that all the tax compliance is done, all the TDS is taken care, because there is a very less awareness among the Indians also and among the resident people also, whether they need to deduct tax and what rate they have to pay the TDS, and how the tax planning can done to optimize the tax, because there will be a substantial tax outgo while disposing your property.
So there are two ways a person can buy real estate. Generally, what happens in India, either they buy it outright or they take loans on it. So now the question that I have is, let's say a person is having a loan that's going on, and he shifts his status from a resident Indian to NRI. And so what happens to the loan in that case? That's the first question. And the second one, let's say a person is NRI, can he take loan in order to buy a property in India?
The first question pertains to the person was a resident and having a loan, and whether he can continue the loan. So it depends upon the type of loan, what kind of loan he has. So if he has any business loan and if he is winding business in India, so obviously that will not be permitted. Another kind of loan, it can be housing loan or something, that still can be continued, but he has to intimate the bank about his change in residential status and updation of address. And if he banks is that he may not have proper income to serve his EMI, they may request him to prepay it, but technically he can continue. That is first thing. Now talking about whether a NRI can take a new loan, apply for a new loan for buying any real estate in India. So let me make you clear that NRI is a very favorite customers for the bank, because they have a very disposable surplus income. So every bank has a dedicated sale and relationship manager to deal with the non-resident queries and concerns. So they are very much happy to give the loan to the non-resident Indians for buying any real estate or any home in India, but that will be subject to the appraisal process they do, whether he will be able to serve India, serve his EMI and all. But there is a very positive approach from the bank while giving the loans to non-resident Indian.
Moving to the remittance part of things, we hear always there's something called as $1 million scheme, $1 million scheme. So what is that about NRIs, and what is the difference between capital account and current account transactions?
Yes. So this is again, I want to give a basic on this part. So first of all, if I'm talking the first part, if there is anyone resident Indian, he wants to abroad any fund outside India, then obviously any fund which moves out of India are regulated by RBI, and they are under the RBI guidelines. Now every bank has one dedicated AD bank, authorized dealer bank, which is authorized to deal in the foreign currency transactions. So if there is any person, a resident person who wishes to remit certain amount outside India, then he need to ensure that that objective for which the purpose is he's remitting the money is in that LRS scheme, liberalized remittance scheme. So without permission from the RBI, up to $250,000 he can remit the fund. That is for the resident Indian. Now talking about the non-resident Indian, so there is a again up to $1 million. They do not need the permission from the RBI for remitting the firm if on that part the taxes are paid and there are certain compliances are done relating to the certificate from CA mentioning that all the taxes are paid in India and they are free to take that amount. So again, there is no specific provision and permission they need up to $1 million for remitting fund outside India. Now, third part you have talked about the capital account and current account transactions. So, again, if you are investing in any asset, real estate outside India, then you are creating any asset or liability outside India. They are called the capital account transactions, and all other transactions are called current account transactions. So, for your purpose again depends whether you are investing for a capital account purpose or a current account purpose. So that's why there is a bifurcation is required, and certain permissions and procedures are depending upon the nature of transactions, whether it is a capital account transactions or a current account transactions. So one need to understand the transactions for which he is remitting amount. If he is creating any asset or liability outside India, it will be capital account transactions, else it will be current account transactions.
How can NRIs repatriate funds from India, and what are the formalities and limits under LRS?
LRS is not applicable to non-resident Indian. LRS scheme, liberalized remittance scheme, is only for the resident Indian to remit fund outside India. So if my son or my brother is staying outside India and I want to remit for his maintenance or I want to gift him money, I can remit under the LRS. Or for any medical help or medical treatment, I can remit the fund up to $250,000 without the permission from the RBI under LRS. So a non-resident Indian cannot remit the fund under LRS. They have to look for the $1 million scheme which is given to them for remitting the fund. So whatever the fund they want to remit outside India, we need to ensure that the tax is paid on that income. Okay, after paying the tax in India, they can remit the balance amount outside India from sale of any property or from disposal of any investments or anything. The balance amount after paying the taxes in India, they can remit back to their country in which they stays. So again, it's depend whether it is the amount is in the NRI account and NRO account. There, as I already said, there are two types of account. So NRI account, they can repatriate without any restrictions, and for the NRO account, they need to take a certificate from a chartered accountant that the taxes are paid. They submit that certificate to the bank, and then the bank will allow them to repatriate the money after payment of taxes.
What are the three major reasons that you have seen NRIs getting notice from income tax or FEMA, and how can they avoid it?
First of all, there is a lack of knowledge among all the non-resident regarding when they become a non-resident under the income tax as well as under the FEMA. That is the first thing. Second part, they are well ignorant because government of India and their regulatory body are not very stringent in taking any action for the non-compliances. So that is the second reason. And third, the ignorance from the part of the resident in the NRI about the tax compliance or the FEMA compliance, and they see more benefit in maintaining the normal bank account or normal investment account rather than intimating the bank that they have become the non-resident, which makes them more challenging and more regulatory and more compliance. So that due to these three reasons, we see that the person who becomes non-resident Indian avoid the non-compliances from this part.
Can you give me a real life case study where you have helped the NRI in order to solve a major financial problem or a legal notice?
Firstly, there is a one recent example, a person, a Indian resident, and he incorporated a company in UK and opened a margin trading account in US. Okay, and after doing all these things, he came to know that he has done certain non-compliance, and then he sought a professional opinion, and then he tried how he can save, and he was in panic for 1 or 2 months when he came to know that there are very stringent uh, provisions related to the non-compliance, and to avoid that penal provisions, he tried to become the non-resident now so that he are out of the clutches from the government of India. So my very strong advice is that before venturing into any transactions, do not make mistake of doing or taking any decision without a consultation from a tax consultant as well as investment consultant about the possible compliances and penal provisions. In another case, just we have seen a person approached us to file the tax returns for the current year. He is a non-resident for 20 years, and the reason why he approached us because he is selling his property in India, and the buyer is deducting a tax at approximate 24%, and he approached us how he can save that. When I went in detail, I saw that since last 20 years he is filing his returns by his own, declaring himself as a resident in India, whereas he is in the job in India. So when you yourself declare as a resident in India, so your global income is taxable in India. So technically, his US income also needs to be disclosed and taxed in India, which he was not doing. So that's blunder he has done. And when I approached and asked him, he said he has not never consulted a tax consultant, whatever he was doing by his own. So now there is a chance that he has done a misdeclaration. So the first advice is do not do any misdeclaration. You need to disclose your current residential status. That is a very unique case and that happens very regularly. Third case we have done recently, one of person has approached us. He has sold his property and there was no gain from sale of property, but as tax requires a substantial tax deduction, so he approached us how fast and how he can optimize his taxes. So there is a concept of lower tax deduction certificate. A non-resident can apply for lower tax deduction certificates in case of sale of property and approach the income tax that he do not wish his tax should be deducted at a higher rate of say 20%, and he do not need to pay any tax in India, so he can ask for a nil rated certificate or a lower rated certificate for the same. So that also we helped him in getting that and reduce his tax outgo in that part.
Alright, let's talk about people returning to India. Let's say an NRI who comes back to India and is holding an asset in the country that he was residing. Like, what happens to that? Can he hold that foreign asset? And what happens to the account?
Yeah. Now, we are talking about the reverse scenario. A person from non-resident become a resident. Again, there is the same procedure. You have to intimate your banks and get your bank account changed from a NRI NRO account to a normal saving account once you become a non-resident as per the FEMA and as per the income tax. Also start filing your tax returns under the correct category. So that first thing you have to get it done. Same thing applicables to your shares, mutual funds and everything. You can still continue to hold your foreign assets, but there is a certain compliances while filing the income tax return. So if you are filing the income tax return under the capacity of resident in India, and if you are having any non-resident the foreign assets, you need to disclose everything on your income tax returns, whatever the foreign assets you are holding. So the person, once he returns to India, he need to ensure that he is informed to every agencies and the correct tax compliances are done.
सर देयर आर अ लॉट ऑफ पीपल जो अभी यूएस में रह रहे हैं, यूएई में रह रहे हैं, वो जनरली इंडिया में कई सारा रियल एस्टेट लेकर रखते हैं जहां से उन्हें रेंटल इनकम आ रहा हो। तो अब यहाँ रेंटल इनकम पे भी उन्होंने टैक्स पे कर दिया है। सो क्या यही इनकम पे उन्हें अपने कंट्री में भी टैक्स पे करना होगा, एंड उसके लिए फिर कैसा वर्कआउट होती है चीज?
इस सवाल का मैं आपको काफ़ी विस्तार में जवाब देना चाहता हूँ, क्योंकि ये बहुत कॉमन क्वेश्चन है और यहाँ जनरली गलतियाँ होती है सभी से। जो आपका जो सवाल था कि कोई नॉन रेसिडेंट है और जो इंडिया में भी कोई इनकम पे टैक्स भर रहा है, क्या उसको अगेन अपनी टैक्स रेसिडेंसी कंट्री में टैक्स भरना है क्या, और ये क्या डबल टैक्सेशन होगा क्या? तो जो कोई भी कंट्री में टैक्सेशन का ये रूल होता है कि इफ़ आई एम अ रेसिडेंट फॉर द टैक्स पर्पज ऑफ वन कंट्री, तो मेरा पूरा ग्लोबल इनकम इर्रिस्पेक्टिव वेयर एवर आई अर्न वो टैक्सेबल होगा उस टैक्स रेसिडेंसी कंट्री में। तो अगर मैं एक एग्जांपल लेता हूँ, देयर इज अ पर्सन, ही इज अ NRI, नॉन रेसिडेंट इंडियन, तो इंडिया के लिए वो नॉन रेसिडेंट हो गया फॉर टैक्स पर्पस, एंड यूएस के लिए ही इज अ रेसिडेंट, दो ही इज अ NRI बट टैक्स के लिए, टैक्स पर्पस के लिए है रेसिडेंट जो हो गया। तो रूल के हिसाब से यूएस में उसकी ग्लोबल इनकम टैक्सेबल होगी, मतलब उसकी यूएस की भी इनकम टैक्सेबल होगी और यूएस के अलावा वर्ल्ड में जहाँ जहाँ वो इनकम कमाएगा वो सब टैक्सेबल हो जाएगी। तो हम एक एग्जांपल लेते हैं कि NRI ने जो है इंडिया में रेंट इनकम कमाया, तो लॉ के हिसाब से इंडिया में इंडियन इनकम पे NRI को टैक्स पे करना है, दैट इज मैंडेटरी। तो इंडियन इनकम टैक्स के परस्पेक्टिव से नॉन रेसिडेंट को सिर्फ इंडियन इनकम हमारे रिटर्न में डिस्क्लोज करना है, उस पर टैक्स पे करना है। अब जब हम यूएस का टैक्स रिटर्न फाइल करने की बारी जब आती है, तो लॉ के हिसाब से यूएस का टैक्स रिटर्न पे तो टैक्स भरना ही है, प्लस ग्लोबल इनकम, तो उनको इंडिया की भी इनकम डिस्क्लोज करना पड़ेगा और वो भी टैक्सेबल हो जाएगी। तो टेक्निकली यूएस में इंडियन इनकम पे भी टैक्स आ जाएगा। ये बहुत ट्रिकी है। अब ऐसी सिचुएशन को अवॉइड करने के लिए और एक ही इनकम को दो जगह टैक्स ना लगे, इसके लिए इंडिया का मैक्सिमम कंट्री के साथ एक अग्रीमेंट होता है जिसे DTAA कहा जाता है, डबल टैक्स अवॉइडेंस एग्रीमेंट, जो इंडिया और यूएस के बीच साइंड है। तो इसके तहत क्या होगा कि जो भी टैक्स उन्होंने इंडिया में भरा है उस रेंटल इनकम पे, सपोज 10 लाख की इनकम थी और उस पर 2 लाख रुपए टैक्स पे किया है, 2 लाख रुपए का इक्विवेलेंट अमाउंट उनको यूएस टैक्स में रिबेट हो जाएगा while paying the US tax, so that a person should not pay a double tax on the same income. But ये DTA हमारा सभी कंट्री के साथ नहीं है, तो we need to ensure what kind of benefit it is given and whether both the countries have the DTAA to avoid the double taxation.
एट दिस पॉइंट ऑफ टाइम इंडिया ने कितनी कंट्रीज के साथ DTA साइन किया होगा अप्रोक्सीमेटली?
अप्रोक्सीमेट 100 कंट्रीज के साथ,
Okay.
जहाँ मेजर हमारे इंडियन रेसिडेंट है। एंड ये ऑनगोइंग प्रोसेस है, ये चलते रहता है, चेंज होते रहता है, कंटिन्यूस न्यू DTA साइन होते हैं, उस पर अपडेट होते रहते हैं जो है। इसमें बेसिक रूल है कि हमारा सोर्स कंट्री में तो टैक्स होगा ही जो है, और टैक्स रेसिडेंस कंट्री में भी टैक्सेशन होगा। तो ये बेसिक चीज को एड्रेस करने के लिए, क्योंकि टैक्सिंग का राइट टैक्स रेसिडेंस कंट्री को भी है और सोर्स कंट्री को भी है, तो एक ही इनकम दो जगह टैक्सेबल ना हो, सोर्स कंट्री में भी टैक्स हो गई और टैक्स रेसिडेंस कंट्री में भी टैक्स हो जाएगी, ये अवॉइड करने के लिए डबल टैक्स अवॉइडेंस एग्रीमेंट साइन होते हैं सभी कंट्रीज के बीच में।
आई थिंक हमने मेजर क्वेश्चंस जितने भी उसको आंसर करने की कोशिश की है। इफ यू वुड लाइक टू ऐड फाइनल 3 टिप्स that an NRI should follow from this podcast, and what are the 3 things, important things that they should learn from this?
As per my experience, the maximum NRI bound to make the mistakes while filing their tax returns because they are not aware about the Indian tax laws which is evolving. So my strong advice to them is that do not ignore and file the returns by themselves. Take the help of any professional they know. Indian income tax system and the technology is one of the best in the world. Very fast, very convenient. So they should follow very strictly to that thing. While they should disclose each and everything. Do not try to hide anything, because lot of data is available with the government, and the non-compliance is very costly. As of now in India, there are a lot of regulatory authority. If they are disposing any investments or assets, seek professional advice. There's a lot of way to optimize and do the tax planning part. Seek professional advice. There are a lot of professional firms available, real estate firms available, lawyers available to guide each and everyone. You can approach them, schedule a Zoom call or a Google Meet with them, and inform your problem and seek professional advice. That is my advice to every non-resident. Do the compliance timely basis properly, and because non-compliance is more expensive in India and everywhere. That is my final advice to every non-resident.